The importance of infrastructure to the growth of any economy cannot be overlooked, and that makes it development key to the survival of any economy. In recent times, China Belt and Road Initiative has played up in any infrastructure development discussed, with a lot of diverse views on the pros and cons of the BRI as the means of infrastructure financing, particularly for African countries. On today's edition of the program, our focus will be on the BRI and how Nigeria can leverage the opportunities therein. And of course, there are issues and challenges. Good morning and welcome. This is Business Morning. Thank you for joining us. I'm Chimezie Obi Iwago. Well, as this year gradually draws to a close, it's again the time of the year to begin to look forward into 2020, particularly in the financial markets. Let's get a brief insight into how AfroInvest Securities think things will play out in the financial markets next year. I'm being joined by the Managing Director, AfroInvest Securities, Ayodeji Ebo. Good morning, Mr. Ebo. Thank you for joining us.
Yeah, good morning. Thanks for having me.
Right, so before looking forward, let's take a retrospect into what has happened so far in the markets this year. Let's begin with the equities. We had a couple of listings and the likes of MTN, Airtel, and of course some deals like CNN and Boa Cement. What would you say really shaped the equities market in 2019?
Yes, the market in 2019 has been very volatile. Despite some of the interesting listings that attracted significant interest in the equities market, we can see year-to-date market has lost about 16%. If you take out the gains in MTN, market would have lost close to 25%. The listing of Airtel Africa, MTN, did not do much to resuscitate in terms of the market, and the reason is not far-fetched. We could see it was an election year, so beyond the rally that we saw ahead of the presidential election, we saw that markets tanked consistently since then. Beyond the election, a lot of expectation in terms of appointment of the ministerial appointment. We also saw from the CBN angle in terms of policies, the loan-to-deposit ratio, in terms of shifting that from the normal 60% increase to 65%. And as much as possible, we saw yields within the fixed income market also oscillate. So those are some of those factors that also impacted the market in 2019.
All right, now, in the fixed income market side, the year saw the CBN stop individuals' participation in Treasury bill sales. How would you assess that market performance for this year?
Yes, I think it's trying to identify in terms of the objective why CBN had to exclude individuals in a bid to see how to discourage the individuals just buying into the OMO bills or to the fixed income market without trying to see how they can take opportunities within or take more risk within the real sector. So CBN excluded local corporates and even the PFAs from participating within that space. And with that, because of we look at the way the fixed income market is structured, OMO accounts for over 75% of the OMO bills or the total Treasury bills market. So as a result, based on the demand within the Nigerian Treasury bills segment of the fixed income and T-bills market, we saw the yield have moved to single-digit rates, and that's as a result of that has also affected in terms of the deposit rate. You know, even for the banks are not very aggressive in terms of mobilizing deposit as a result of their target to meet the loan to deposit ratio. Because when you look at in terms of the cash reserve requirements of about 22.5% of whatever deposit that you receive, then you also have to meet up with the loan to deposit ratio. So we are currently in an environment of a very low yield, and that might propel for the customers, for the investors to begin to look for other opportunities, though it will come with its inherent risk. But I think that's part of the drive of the CBN, that rather than people just putting investment into risk-free, putting funds into risk-free investment, you should try to look at other opportunities, though come with its risk. Then you to require some form of premium for those investors, and as a result, we begin to see people coming up with initiative, the ability to take on more risk, and to see whether the real sector, which is the focus of the government of the CBN, would grow. But I would also like to just emphasize that in terms of growing that real sector, government has continued to try to see how they can jumpstart the economy on their own. Contribution of government is less than 10% to the growth of GDP. So government needs to be very conscious that even if we double the budget we double the budget, government itself cannot grow this economy. The participation of private individual is critical. So you need to provide incentive to attract the investors within that space.
So what is AfriInvest's position on how investors are going to play in the market come 2020?
Yes, we would expect, looking at it from a yield and dividend yield perspective, we would see for some investors may be willing to take some form of more risk within the equity space. When you look at the average dividend yield in the market is about 6.4%. If you take out, you look at the banking sector is around 13%, which is significantly higher than what you would get within the fixed income market. And we feel that as investors anticipate the earnings season in the first quarter of 2020, we may see some form of market rally in the equities market. For fixed income market, for investors that are not willing to take risk, will continue to play no matter how low the yields will be, especially for PFAs. They will continue to play significantly within that space, even at very low single-digit rates. So, but we are not very bullish in terms of the equities market in 2020, because it's only going to be premised on policies. So what are some of these policies that government should be looking at to jumpstart the economy? Because consumer spending is being squeezed, and if your disposable income is being impacted, your ability to even save would also be limited. So what would expect in terms of our outlook for 2020 will remain very soft on the equities market. Fixed income will still be the way to go, but government needs to see how they bring together in terms of the private investors. Also, FDIs is also very lacking at an all-time low of around $2 billion. Government needs to see how they want to make deliberate efforts to attract foreign direct investment, attract private participation, such that would create jobs, would increase productivity, and as a result, that will be able to jumpstart the economy. Because looking at the equities market, most of the quoted companies are struggling. Cost of doing business, it's going up, and because you can't also pass that cost to your consumers, as a result, margin is thinning out, and for equity holders, the payout would also be lower. So in terms of expectation for investors, will not be as bullish as it should be. Fixed income, if the demand persists, rates will continue to go lower than current level.
All right, thank you very much for your time, Ayodeji Ebo. Ayodeji is MD AfriInvest Securities.